Good morning, everybody. It's Christian from Serene Education with the 4 majors notes update for the 14th of February 2013. To all you ladies up there, happy Valentine's Day. Hope you have a fantastic trading day as well. Let's crack on and see what's happened or occurred overnight, and let's see if there's anything for us to trade going into today. So daily, wow, yesterday indecisive candle, price pushing to the upside, testing that all important 13,500, which is our long-term support and resistance level on our weekly, and subsequently failing to go any higher, closing lower at the low of this 50% of this candle, and showing up on the Asian session. This decision here after this indecision candle is looking like a lot of selling. So as it stands at the moment now, intraday we should be looking to those targets around about the 13,500 mark to start with. This is being our previous pullback line. So on our intraday time frames, that level there, 1335, happens to be price support and resistance at the institution moving average, and there it is over there. So if you're looking at a trade, we've got the institution to play with, so look at the risk involved between here and there. Not a hell of a lot, and we have the institution below price. I'd like to see 1335 being broken first before I look at any other further trades. But on the 4 hour, you can quite clearly see trend is negative at the moment now. You got lower swings, which depicts downside movement, swing low, swing low, swing low, taking us below that 13,500. We wanted to be above 13,500, and it failed to stack up. Now we're finding resistance, a nice little evening star formation here at the underside of that area, and sure enough, price is now reverted to the downside. So as it stands at the moment now, get below the institution, or you can be a really aggressive trade at 1335, but ideally like to see a break below the institution, below 1335, get a nice juicy close below that, and then pull the trigger, and then you should be looking to targets towards that 1320 for the first target. Onto sterling, let's have a look at the daily over here. Nice push off the bottom now, finding resistance at 1570, and price yesterday selling quite drastically and moving to the downside and moving towards a consolidation area here in the shape of the, if I'm not mistaken, that's the 1500 mark, 15500 mark, and you can see price trading slightly tentative overnight. If you look at the 4 hour time frame, you can clearly see last night or yesterday afternoon at 2 p.m. GMT, price really sold off, and sure enough at the underside of 1570, which happens to be price support and resistance, and sure enough she's been heading to the downside. Near term resistance roughly around the 15,500 mark, which is where price is trading right now, so be aware of that, guys. Factor that in. Let's have a look at the fib projection from the start of this downside trend yesterday, a couple of days ago, moving higher and pulling back, and you can see that the 61.8 has just been broken, and 100% is not too far below us. So as it stands at the moment, you can see on our weekly for this particular pair, price is now failing at the underside of the institution, and this looks like it could be a confirmation signal for further downside movements. If that's the case, then we should be heading towards that all important 15,300 long term for this particular pair going forward. So look for opportunities to gain entry. You can see price tentatively making its way down on the hourly, very, very, very shallow price action, but still moving to the downside nonetheless. You can see lower swings depicting downside. So as it stands now, look for a nice entry and target that 15,300 long term for the foreseeable future. On to Swiss franc. Let's have a look at Swiss franc daily. You can see price yesterday very indecisive, finding support here near term, and you can see consolidation at this area here. Yes, it is still negative, but you can see that the 50 period moving average acted as a stop resistance above price, and now consolidated. We want to see a nice break of this area here at the 91.6 to tell us that price is still looking or forming a lower swing, and we should have been looking down here towards that 910 as our first target. We had an indecision candle, so price is now, as you can see overnight, pushing higher. So the decision looks like near term is going to be heading back up towards this 925, back up towards that 930 mark in the foreseeable future. If that's the case, we would like to see this candle, this daily candle, closing above the current high, which is now testing in the shape of the 92500 mark, if I'm not mistaken. So it's imperative this candle closes higher. If it does, then what we could be seeing is a move to the upside, pull back, and then a continuation in the direction of the move. So at the moment now, got to get a nice bullish gulfy candle or close above this 92500 mark intraday. Get that. Then we should be targeting that all important 925 above price. You can see the institution is still there. Get above that 925 mark, and then we should head towards 925 and ultimately back up towards the 930 mark for our intraday trade. So look for a nice bullish engulfing candle. If this 4-hour candle closes above the institution, target the upside for intraday trades for the foreseeable future. Quick look at the hourly just to show you what's been happening this morning on the start of the European session. Look at this candle here, this last hour moving higher. If it closes above this consolidation area, you can quite clearly see that we've had a lot of hesitation at this level. If it closes above, then we should be targeting 925, and as I mentioned, back up towards that 930 intraday. So hang tight, be patient, put an alert out to see if we're getting any if we get a nice juicy hourly candle break to the upside and close. If it does, pull the trigger. Well, look at your money management first, see if that's right, and then look towards the 925 and 930 to the upside for the foreseeable future. On to the US dollar Japanese yen. Let's have a look at this. We know that 9400 is a major support and resistance level because on our weekly that tells us that we are trading into a 38. Oops, let me just bring it up so you can see it. The 38.2 February tracement from the all-time high. If I go to my monthly, you'll see exactly what I'm talking about. So I've taken the all-time high on my monthly, going back to 2007. You can see the drastic fall for the US dollar against the yen. However, a nice correction starting in 2012 and really moving high going into 2013. In doing so, near-term resistance here on the Fib pullback here at 23.6 was breached going into December, January, and you can see that price since breaking that 23.6 has really rallied into the 38.2 Fib retracement area at the 9400, which constitutes prior Fib retracement areas here at the consolidation range. So now getting above 94 to see any further progression towards that 50% and then ultimately to the 61. So on our daily, there it is. Okay, there's a major hesitation. I need to see price trading above that area, ideally above 94.50 to see any further progression up. If not, what we're seeing is consolidation with an outcome potentially of a pullback. That pullback range will be roughly around here to start with, roughly around the 92.50 mark. You can see that's where the consolidation is. Get below that, then you're looking towards these areas here at 90.50. Hit below that, and then you're looking around about the 88 mark, back towards the 50 period moving average, and in close proximity to that 23.6 on our monthly, weekly charts as the next percentage range to the downside. So consolidation, indecision candle yesterday. We want to see a decisive candle. If this is definitely resistance here, we want to see a bearish engulfing candle taking us below 920, and if you get that, then we should be targeting these areas to the downside: 95, 90.5, 88.0, etc. to the downside. So have a look at that. Plot those lines on your intraday charts. There we go. My 9400 is my major area of resistance, which is the 38.2 Fib retracement area on my monthly and weekly. That's clearly in there. You can quite clearly see that price, when it did break above it, failed to actually hold on to that. This is where you've got to have patience. Breakout, there's always going to be a pullback. 90% of the time there's a pullback. That pullback occurred. It failed to actually act or use the 9400 now as a support, where before it was a resistance, and then to continue it actually broke lower, and that's subsequently saw price moving back down towards, or moving its way back down towards the 90.50. What it's doing in the moment now is consolidative. It's reattempting the intraday highs, consolidation highs. You can see quite clearly the price actually failed to move any higher intraday, and a lot of resistance near term, and is reattempting those highs now on the 4 hour. Got to get higher than that towards 94. If not, then what we're going to see is price just falling over and heading towards that 92.5 mark for the foreseeable future. So that remains to say that I've done the 4 measures this morning. Hope they've been a benefit to you. Just please, if you're using this particular template, to please back it up with the sound money management, but also to follow the rules of this particular template. Very, very important. Okay, so plot your major support and resistance levels on your larger time frames. Use those levels intraday. Look at where price is trading. What is it that the template actually showing you? Are we still seeing bearish or negative sentiment or positive sentiment in the direction of what the trade is doing at that particular time frame? And then look at your money management to cross reference to see if it's genuinely in your favor, and then you just do your money management and pull the trigger. So please follow the rules of the particular template that I am showing you here today. And other than that, keep it simple. Have a fantastic trading day. Also, to all you couples, girlfriends, husbands and wives, etc., have a fantastic Valentine's Day, and I'll catch you tomorrow morning. Until then, trade serenely.